Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Really ugly day in the markets today. The CPI number couldn't have been much worse, coming in hotter than expected, a reading of 8.6%. And then the core CPI number, which I think is kind of bogus anyway, ex food and energy, where they kick those two things out under the guise that, oh, they're so volatile. But I've always felt like, but we eat and we put gas in the car, unless you have an electric car, so those numbers matter. But even the core CPI showed an increase of 6%. And that prompted respected fund manager David Einhorn to come out and say he doesn't think the Fed has the tools to fight off this inflation. Pretty scary forecast there. Interest rates were up. The dollar was up. Even gold was up today as the markets got shellacked to the downside. You'll see the gaps in all the charts once we get there. But talking about the charts, what do the charts of Tesla and Bitcoin have in common? Let's look at the charts. At the time of this recording, it is late on Friday evening, so the futures market is closed. Taking a look at the SPY, you can see we gapped down today on the heels of that worse than expected CPI report that I talked about in the intro. In fact, this is going to be a common theme through all the markets, not just the US, but international markets as well with this gap down. You can see that we're a little bit below the 10-day moving average now on the low. Hard to imagine we're already oversold, but we are. Interesting that the 10-day moving average did move back up towards the 50-day, but it didn't quite get there, which it usually does when you have this kind of separation. Normally the 10-day will actually make it to the 50, at least not yet. It hasn't happened, and it sure looks like that wave 5 is underway, but that gap is going to have to get filled. Does it get filled at the beginning of next week? That's a question I'd like for you guys to answer. Will that gap get filled early next week, or are we on the way down and that's going to be a gap that gets filled somewhere down the road? Leave a comment underneath the video if you would. Just curious as to what you think about the potential for that based on the heels of the news that came out today. Taking a look at the 10-year, and we talked about interest rates in Tuesday night's TradeFinder. If you haven't signed up for TradeFinder yet, do it now. You can sign up underneath this video, or you can go to our website, ewotrader.com. We do it every Tuesday night at 9 p.m. Eastern Time. We talk about the markets, we look for trade ideas, and we have a live Q&A. And during this week's TradeFinder, I talked about how this incline in interest rates hadn't really affected the SPY as the markets, all the markets, were waiting on that CPI report today. But while that's changed, look at that move to the upside. The markets moved down significantly, but interest rates making a big move higher, as you would expect. And we talked about in the intro as well. Now a 75 basis point rate hike seems to be on the table. Many think that it'll happen at the next meeting, or the Federal Reserve should do it at the next meeting, whether it happens or not. So now we're right back at the highs on rates, and it looks like that ain't going to be the end of it. Going to continue to march up towards this wave 5 target. Looking at the dollar, as you would expect, the dollar moved to the upside as well, even on the heels of yesterday's move up in anticipation of a hotter than expected CPI report. So the dollar moving up this significantly in this area doesn't bode well for international companies. There really isn't a whole lot of good news for equities moving forward, other than the fact that the sentiment is going to be so bearish now. That's really the only thing. When the market all leans one way, quite often it goes the other way, even if it doesn't really make sense. But right now, it is hard to make sense of a bullish case in the markets. Well, with the dollar going up, you'd think, all right, well, that's not good for gold. Well, check that out. Even gold was up today, but it didn't break above that 175 level, and that's the area of resistance that we've had for quite some time. Gold really needs to get it back, or GLD needs to get above 175, and if it does, on the heels of this big, huge outside day, with the high being higher than yesterday's high, the low being lower than yesterday's low. If we break up above that area, then we could be off to the races to the upside on gold. But we're in a qualified 5-wave impulse pattern. we're right at that 38.2% fib level. So even in Elliott's world, where he didn't really care too much for the 23.6% fib corrective levels, he really liked that 38.2. So we're kind of there now. So it's going to be interesting to see if gold can follow through with this, noting that we're also right at the 50-day moving average. So an awful lot of resistance here at 175. It would be an impressive move if it could get up above that area. Looking at the rest of our markets, the Dow, same scenario, gapping down. Again, all these charts, I'm going to be showing you these charts, and they all look exactly the same with ugly days and gap downs. With the DIA gapping below 320, it had already moved below that important level of support resistance at 330. It did that on Thursday, follow through today, but again, a gap. And my feelings on gaps. Gaps get filled, but we don't really know when. That's why I asked for your commentary on what you think when the gap will get filled. And I'll share mine with you a bit later on. Looking at the Qs, same scenario here. Gap down, slightly different chart, still just as ugly, but the Qs had already made their wave 5, extended past 100% to 105. Now, are we going to go to the next fib level at 161.8? We take a look at the DMI here, you can see that it's kind of setting up for some strength to the downside on this move. Good separation between the two directional indicators. The ADX is moving up. It's about to break above 20. It's above the positive directional indicator, which is the green line on the bottom. That indicates buying pressure. The red line indicates selling pressure. So it looks like we may take out that low on the Qs that was put in place on the 20th of May and head down towards that 161.8% extension. In my mind, the only question is, does the gap get filled first before we continue lower? Look at the Russell. Now it's starting to set up into a pretty decent 5-wave impulse pattern. Tried to break above 190. We talk about this all the time. Talked about it during TradeFinder as well. Broke above 190. Could we get a follow-through day? How important a follow-through or confirmation day is, because there's so many one-day head fakes in the markets. Well, it broke above it on, you can see there on the 7th of June, but no follow-through day. And then here we go, boom, boom, boom. 3 straight days back to the downside. Also a gap in the IWM, which doesn't gap as often as some of the other markets. So that was pretty impressive. But now 190 is resistance, as you can clearly see here. Not only is it resistance with the wave 4, but also the pattern as well. And we look at the moving averages. Now the 10-day got almost to the 50-day on the Russell. It's starting to roll over. So we've got kind of a whipsaw right there with the 10 and 30. That fuchsia colored line is the 30-day moving average. A lot of institutional traders look at that 10-30 cross. But in this case, that bullish cross, the 10 breaking above the 30, was pretty short-lived. And thinking about a 75 basis point rate hike on the horizon, and the fact that inflation is nowhere near peaked out for the last several months, people have thought that, hey, maybe it will have peaked out. David Einhorn's comments that I mentioned in the intro, that the Fed doesn't have the tools to tackle it. Everything looks pretty bleak. But let's take a look at a couple of charts that fared pretty well in today's selling. One of them being Bitcoin. Yeah, it was down, but it held above 28,000, which is really important. You can see this sideways move where Bitcoin has really done nothing for the better part of 2 months, but with what the market's been doing nothing, it's not so bad. So we're kind of in a tight trading range here between 28,000 and 32,000. So another comment. What do you think? Which way do we break on Bitcoin first? Above 32,000 or below 28,000? So pick whichever one you want to make a comment on. But I think it's pretty impressive that it's held it so far. But if we break 28,000, you've seen the scenarios in the past recordings. If not, take a look at them. But it gets pretty ugly from that point. And then there's your wave 5 target all the way down just under 22,000. And potentially as low as 20,000. But we got to break 28,000 first, so we're a ways away from that. Tesla, another chart, did pretty well. Yes, down on the day, but been hanging in there pretty well. We haven't even labeled a wave 4 here yet, so perhaps we could bounce back to the upside, or is it a worse scenario where the wave 3 is going to extend and continue lower? That's not really what we would want to see. All right, so looking at some of the other international markets, look at Canada, you can see just as ugly as in the US, two gaps down in that chart, and there's that reverse cross with the 10 and the 30-day moving averages. Again, all the 10, 30, and 50 kind of came together there, and now breaking significantly to the downside. Do those gaps get filled? Do both of them get filled? Just one of them? We'll have to wait and see. All right, on to Australia. Look at that. That's the Aussie market had been holding up pretty well and making a nice run, a better bounce in the markets in the wave 4 than the SPY had, but got right to that 61.8% fib level, and that was it. Down and in really ugly days as the metals were getting killed up until today, but significant move down, heavily resource rich. Australia was feeling the pain, and then down here we're almost to the wave 5 on the Aussie market. So could it be the first one to rebound? We'll see, but right now it's significantly oversold, so we'd expect some sort of a bounce back or at least a sideways to drift up move on the Aussie market. That might be the first one to bounce, or have the strongest bounce, if you will, in overcoming these oversold conditions. India, all the way back down here to this level. And this is the INDA. All these levels down here around 40. All these times down here around 40, I meant to say. And this move to the upside, it looked like maybe India was onto something. They've had a pretty rough go over the last couple of months. You can see from the peak there in early April to where we are now. But that was just a bounce and back to the downside. And then when you see something like that, you want to know, is that a zigzag? So let's take a look and see if that's a qualified zigzag. And so I would draw it this way, and it is pretty close to that 38.2% fib level, which would yield a 61.8% C wave extension on the zigzag, which would bring us down to about 38. So all we have to do is break this area where we are now. Again, looking at the 10-day moving average, a bit oversold, not significantly, certainly not what Australia is with how oversold they are, but enough to where perhaps it rests at the beginning of next week also. Looking at the EWG for Germany, I see same thing. I mean, I mentioned in the beginning, all these charts look the same, so it kind of just showed you the SPY and say everything looks exactly like that. But now we're down to the lows again. Same scenario with India. We were getting a pretty decent bounce here on the EWG, and Germany could use it with how bad their charts have been, how spot on Elliott Wave has been over the past year and a half or so with the German market. But boom, boom, double gaps down there, and then significantly oversold as well. So these gaps need to get filled in these markets. So the only question, as I mentioned earlier, is when do they get filled? And then taking a look at the VIX, you can see that we talked about this in Insiders meeting last night, and that's one that we do every Thursday night. We do that for our alert subscribers, where we do a market update, talking about all our alerts, and then also an extended Q&A. And when triangles are formed, they get retraced. The breakout move gets retraced. So you have a triangle. It's going to break out. Don't know which direction. But once the breakout occurs, according to Elliott Wave corrective triangle rules, that breakout will get retraced. Well, it got retraced really fast. So there's the downside breakout here out of the VIX. And then the retracement is all the way, boom, right back up to the point of the breakout. Now, one thing that you could say is that, man, as bad as the market was today, wouldn't you have expected a little bit higher spike up in the VIX? So I think if there's anything bullish to take out of the carnage that occurred today across the map, is the fact that the VIX didn't really have one of these big, huge, massive spikes that you see when you go back and look in time at the VIX. So maybe that helps to lead into the bounce, but it looks like that scenario that I had once talked about of breaking above the resistance levels, being all over the financial networks, don't look like that's going to happen. All we could do is get back to resistance. The only market that made above the resistance level was the Dow, and that didn't last very long. So I hope you're enjoying a great weekend. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.